Business grants can significantly help small businesses stay afloat, and the benefit of not having to pay back the funds makes them much more desirable than business loans. Small businesses may still have to pay income taxes on the grant money though. Here are a few important points to know. Grants are taxable. Business grants are usually considered taxable income. There are a few exceptions, but each grant will have its own set of requirements. Always make sure to read through the grant agreement or ask the funding organization for specifics. Research your local laws and federal requirements for the type of grant and whether or not it's taxable. You will also not be able to deduct taxable grants from your business income. COVID-19 relief grants. You may have more questions than normal because of the different forms of governmental relief brought by the COVID-19 pandemic. The Coronavirus Relief Fund was created as part of the Coronavirus Aid, Relief, and Economic Security Act, or CARES Act, which set aside funds for governments to cover public health emergency costs and community support. CARES Act funds are generally taxable grants, as are grant programs created by your local government to support businesses. Forgiven PPP loans. It's also helpful to note how Payment Protection Program (PPP) loans are treated. Even though the PPP is a loan program, these loans can be forgiven in full if a business follows all requirements. If the loan is forgiven, that amount is not taxable on a federal level. However, many states still tax those funds as income, so make sure you know your state's laws. A tax professional can help you figure out whether your specific grant should be included as taxable income or not, but you should be ready to cover the taxes on grants you received during the year. That shouldn't prevent you from doing everything you can to reduce your tax overall burden though. Here are a few other tips for preparing your taxes if you've received a business grant. Save for taxes. Set aside money to cover the taxes before you spend the money. Preparing to cover the taxes up front will prevent surprises at tax time. Be sure to plan for a higher tax bill the following year if you can't set the tax money aside when you receive the funds. Estimated quarterly taxes. Remember to include grant funds in quarterly tax payments if your business is required to make them. This is another way to make sure you aren't hit with a surprisingly high tax bill the following year. Review grant terms. It may seem obvious that you need to carefully review your grant agreement. Many businesses get caught up in using the funds and don't give the terms their full attention. Make sure you understand all your obligations for the grant. Federal and local laws. There are federal, state, and local laws to know regarding tax reporting related to grants. Always be diligent to ensure compliance with these rules so you aren't faced with an unexpected tax bill or penalty for a misstep. Calculating these obligations can quickly become confusing. It's a good idea to speak with a business tax expert to make sure you understand all the requirements for filing. The Silver Tax Group team is made up of tax lawyers and experts delivering emergency tax services, accounting and consulting, tax debt resolution, business tax filing, IRS audit defense, and much more. Contact us today to find out more. And if you enjoyed this video, be sure to like, comment, and subscribe.